Okay, so let's get started. Obviously, the yen is very active this morning. Why don't we start with the Japanese yen? Is that good for everybody? And you should see a number of charts on your screen. Okay. Actually, quickly before we start with the Japanese yen, the only chart that's different here is this chart in the upper left corner. This is the U.S. dollar. All right, I'm going to blow this up a little bit, and before we look at some of the majors against the dollar, here we go. Okay, there's the dollar chart. I'll try to turn the sound up for you. There we go, that should be a little better. Okay, so before we look at any of the majors against the U.S. dollar, let's figure out where the U.S. dollar is likely to go next based on where the real buyers and sellers are in this market. Okay? Now, for those that are kind of new to the sessions, what I tend to do is stay away from conventional technical analysis. In fact, I'll go as far as to say that I don't use anything I don't use any conventional technical analysis. I think conventional technical analysis is completely flawed, and I don't want to sit here and beat it up, but I don't use any of it. And reason why, in short, why I would argue that it's completely flawed and that nobody ever makes consistent living using any piece of conventional technical analysis is because if you think of the conventional chart patterns, any of them, they're all breakout entries, right? Well, breakout entries always have you buying after a rally in price, have you selling after a drop in price, okay? You would never do that in any other part of your life when buying and selling anything and be successful. That's why people that's why people fail with that here in the markets. If you talk about indicators and oscillators, again, those are just a derivative of price. They're only going to do what price does after price moved already. So they're going to be late and lagging. That's only going to add risk to your trading. So in short, I don't agree with any conventional technical analysis. I think it's, anyway. So instead, what I do is draw from real life experience, from my experience, and specifically my time at the Chicago Mercantile Exchange, handling institutional order flow. Now, I could have been on a bank dealer desk, it could have been anywhere, but the bottom line is the ability to identify where the real buyers and sellers are in a market based on real supply and demand analysis. That's the key to identifying where prices are likely to turn next. Okay? So, that's my little 3-minute intro for new people. And let's take a look. So let's identify where those areas are, right? Okay. On the dollar, we want to start with current price. The chart, actually, it's a late chart here. The rest are fine, but I'll fix that later. So when we go left and down, the level that we want to identify below current price, I'm going to do that for you right here. And this is where we would expect the dollar to turn higher next. Take a look. Okay. So I've just marked off some demand there. Let me put the near-term supply level in. Okay. And these are where I would expect the next turning points to be in this set of markets. And there's that, and there's that. I'll recapture the chart for you, don't worry. Okay. Now, the dollar, I'll refresh. The dollar is into a little area of demand at the moment, where it could turn higher. But the area where I would be comfortable putting my money at risk at is the level below. Okay? Again, I would not be surprised at all if the dollar turned higher from here. Okay? But I'd be much more excited looking for a long position a bit lower, at that lower demand level that you see there. Okay? Yeah, there's a better level below. Okay? All right. Yeah, Adrian, absolutely. But again, don't think conventional. Where does every downtrend end and every uptrend begin? at a fresh demand level. Just like every uptrend ends and every downtrend begins at a fresh supply level. Keyword there is fresh. Okay. All right. So, having said that, now let's go out to some of the majors. Let's start with the Japanese yen. So I think we had a little more intervention, correct? All right. Now, let me give you a little history lesson here real quick. Not a history lesson, but when I started my career on the floor of the Chicago Mercantile Exchange, the market that I was responsible for more than any other for a long time was the Japanese yen. And back then, back in the day, right, the 90s, I would be, okay, I would be, dealing with the yen, and literally it felt like every other week the Bank of Japan would intervene. Their currency is getting too strong. They wanted to keep it weak. Obviously export economy. Everybody knows all that stuff. But here's the important point of what I'm saying, and this is really important. Every single time that I've ever seen the Bank of Japan intervene in the market, this is what happens. And it's like any intervention. It's like bailouts here in the U.S. or anything. Anytime I've ever seen the Bank of Japan intervene, and I experienced that so many times on a trading floor at the trade desk, they would intervene and they would get the Japanese yen at a price at their target price they wanted it to go to, right? They would accomplish that. But literally within a few hours to maybe a day or two, not only would the Japanese yen be back to prices prices right before the intervention, right? But now it would be screaming in the other direction. So that taught me to now again, could that not happen? It could not happen. I've just never seen it not happen. I've never seen intervention be successful for more than a few days. I've never seen bailouts, like in the U.S. with the stock market, for example, rallying. I've never seen that work. I've just never seen it. Okay? All right? Yeah. So, okay. So so what I do is I always bet against intervention, but at significant levels, at supply and demand levels. It's not like when they intervene, you want to just start going against them. It's not what you want to do. But find your level. If the yen starts to rally strong, I go and look for a supply level. All right. So given what's happened, and they could come in and do it again, let's take a look at the chart. Okay. And if you specifically focus on this chart right here, okay, let me just recapture the chart for you. Okay. So specifically, take a look at this area right down here. Okay. Now, I'd be surprised if prices didn't come down through that area, and I wouldn't be surprised if it happened soon. We'll see. Is it possible that it won't? It's possible, but again, I'm just drawing on years and years of experience. So, if I'm going to play for a move down, through that area, okay, let's take a look. Let's go to a smaller time frame, and now let's try to find a supply level above current price. Okay, maybe even a little bit smaller than this. Let's take a look. Okay, now let me put two charts next to each other because I think this will help you get the point. Okay. Here we go. Let me grab the chart. All right. So if I'm gonna if I'm gonna set up a trade to potentially take a short through that area with the circle, okay, I'm gonna focus on one or two key levels here. First one being this one right here, okay. And let me put some lines in, and I'll share it with you. Again, could intervention, work and be sustainable? I guess it could. I'm just telling you, I've never seen it happen. Okay. Okay, so can everybody see the chart with the supply level there? All right, so that would be the first area of interest. All right, and again, if this does not meet your risk reward comfort level, just don't take the trade or watch it or what have you. Okay. All right, so the entry would be selling short at the bottom black line with a protective buy stop just above the area. If you also wanted to focus on this little area just above, I suppose you can do that as well. Okay, you have two little areas on top of each other. And then the play would be to bet for a move down to, I'd say right about 83.15. Okay. All right. Yeah, it is. Normally we don't like the pattern drop-based drop. Normally we're looking for rally-based drop. Look, I love that area above 85.50. This is a fantastic supply area up here. I just don't know. I would probably expect prices to get back down to the bottom there before getting back up into this supply area. And I'll put that supply area in that you're talking about. Okay. Right. And the reason why, for me, again, normally we want rally-based drop, not drop-based drop. But again, for me, again, I've gone against intervention so many times, and maybe I'm just a little too overconfident with it. In other words, like when during the bailout cycle in the U.S. here, in the trading rooms, that was a sell signal for us in the stock market. In other words, anytime we heard the word bailout, the strategy was to just go find your nearest supply level in the S&P and sell short, right? Price would spike up on the news and pretty quickly be right back down, okay? So good question here, Trying Trader. If you take a look at this circled area, right? Now, I don't know if you've been with us for all this. We've done a lot of sessions on how to identify market turning points based on, the supply and demand analysis. And I don't remember seeing your name. So if you haven't seen those, I'll give it to you the short version here. Plenty of recordings on it if you need more info. But in this circled area, there's really nothing in here to stop prices from falling, right? There's no demand levels in there, you know what I mean, to stop prices from falling. Okay? So that's why we'd expect prices to, probably come back down here. I could be wrong. I could certainly be wrong. Okay, but again, for those that have been with us for a while, I'd say we're right quite a bit more than we're not right. And again, you don't need to be right every time. This is all just the whole play. It's a numbers game, right? Risk reward. And I don't want to spend the entire session on the yen, but I just want to throw that out there. Okay. Ralph, so ignore former levels. What do you mean by, I'm not sure what you mean by former levels. Like are you talking about this stuff over here to the left? If that's what you're talking about. Yeah, see, we would never look at that. That to us, that's not a level. Like to us, this is nothing. We would never use this as a level. Okay. All right. So, let's see. Okay. Oh yeah, SD, please resend. I'm pretty caught up in emails, so sorry about that. Nice to see you're in that trade. Good stuff. Yeah, and if you're new to the sessions, I strongly encourage you to watch some of the recordings. Not because I'm trying to, they're all free. I'm not trying to sell you anything. But I think it'll really help you understand the whole concept that we do in here. All right. And let me scroll down. I want to make sure I don't try not to miss anything. Okay. Jack, just from those levels. So we're kind of, prices, the dollar can rally from where it's at, but I think a more significant turn would come from that lower level that we identified. Splaw is asking a great question. The way that the strategy is laid out is we don't wait for a turn in price. We enter at the level. Okay. We don't really wait for confirmation. We want to, but the key is, don't start doing this until you're able to identify, the key levels that we look for. Okay. Vorbis, good question. So I think you're talking about the 83 area. I wouldn't think that would be too strong. You'd probably get a bounce out of there, but I would still look to short against, I would look to short a bounce off that into the nearest supply level if and when prices get down there. Okay. Trying, and I see your question there. We'd want it to get back up into a supply level to get a short entry. Okay. Yeah, I don't use any moving averages, Andreas. The reason why I don't use any moving averages is because, number one, I would never use them as support and resistance because they're not support and resistance. They're just a moving average, right? The time when moving average will look like it works as support and resistance is when that moving average also lines up with a real level. And I would never use them for anything else as far as entries go or anything because they lag price so much. It makes trading so high risk. Okay? All right. Okay, so there's some recordings. Thanks for posting that, Maud, okay. All right, so let's see. Let's take a look. Yeah, and the key again is to identify the key levels. And let's move on. So we can move on to another market. Okay. Right. Again, what we're doing is this isn't like some theory or anything. What we're doing is here, look, it's pretty simple. If you think of it this way, if you forget about everything that you've ever read in a trading book, forget about technical analysis and all this stuff, and you say, wait a second, at the end of the day, isn't all that matters, if you knew where the real buyers and sellers are, in a market, would you need any other information? Does anything else matter? I mean, if you know where the real buyers and sellers are in a market, isn't that all that matters? You wouldn't need anything else, right? Okay. So if you agree with that, then the question left is, what exactly does that picture look like on a price chart? Okay. And what that picture looks like on a price chart is, it's a price level where prices couldn't stay at and rallied away in strong fashion. Now, in the webinars and recordings, you see, we go over a certain number of odds enhancers. Now, there are more that we do in the trading room at Online Trading Academy, but there's a bunch in those recordings, and that's what you want to really start to focus on. All right, let's go to another market, and a market we spent a lot of time on the week before last here at FX Street. Okay, is the pound. And we can come back to the end. Okay. All right. Okay. Yeah, this session's being recorded, but again, go watch the other recordings when you get a chance. And sometimes I feel bad for newer people because I think it's almost like a new language to a new person. But and while I apologize for that, I also strongly encourage you to watch those recordings because I think this will get you closer to the truth of how all this stuff works. Okay. If you have any questions, give me my email address at the end. All right. Last session, if you see here's the pounds. There you go. And hopefully this is helpful. Yeah, no problem, Jack. We'll take a look at the dollar again before we end. And don't worry, those levels aren't that close. You're not missing anything at the moment. So if we take a look at the daily chart of the pound, this is a couple weeks ago or so. This is the last time we did a session here. This is the chart we had in. We identified that demand below and the supply above. Okay? And that gray line, we just put that in. Remember, that represented kind of equilibrium, right, which we don't want to do anything there, right? So prices, came down to that demand area, and now they're drifting up to supply, but they're not there yet. Okay, so given that price is rallying, so we've got kind of an uptrend going on here. But also given that we're not at larger time frame supply yet, now we can comfortably look for a demand level below current price, which is where we would want to take an entry on the long side. But be careful, because the closer we get to this larger time frame supply on the daily, okay, the less we want to be buying pullbacks to demand. Okay, in fact, we want to stop doing that when we get really close to that larger time frame supply, and that's when we want to, position short for the next trend, which is likely to be down, right? Okay. All right. So, given that information, if we come down to this smaller time frame here, let's capture a chart and let's look for an area to potentially buy into this market. Let me put some lines around the level. Now this again is a level that I normally would not put out here in FX Street. In the trading room and Online Trading Academy, I'll put these out there sometimes because they've been through all the odds enhancers. But let me put it out here for you. It looks decent. Okay. Now this would be for a short-term trade, that little level up there on the 30-minute chart. Okay. If I were a day trader, I'd probably be comfortable taking a bounce off that level. You know what I mean? Oops, there we go. Turn the mic off by accident. All right, and the reason why I would say I would focus on that if I was going to take that as a short-term trade, almost a day trade, is again because of where we're at in the bigger picture. You're coming into weekly supply. You're coming into that daily supply. All right. Okay. All right, makes sense. But we did have a nice strong rally out of this area. Okay. We finally broke out through this 157.20. And okay. And honestly, if I took that trade, I'd be looking to take profit on the entire position after probably a 2-to-1 gain. Again, just because, think about it. Now, one thing everybody here knows, anybody that's went to school at some point is familiar with the supply-demand curve. And I'm not saying you have to be an expert economist, but you're probably familiar with the supply-demand curve. So how do we quantify the supply-demand curve on a chart? Take a look at this daily. That's exactly what we did. Okay? The top and bottom of the curve are right there. So the logic is, as we get closer to larger time frame supply, we're pretty high up on the curve. The odds are going against the buyers and are now moving into the favor of the sellers. Okay? Okay. All right. Any questions on the pound? And then, as we get close to that supply again, that's when we want to start to position short and look for a move to the downside. But let's say the pound hits that supply level. Before we take a short position there, what's the first thing we want to do? What should we do before pushing the sell button in the pound there at supply? What should we do? Okay. Yeah, definitely profit risk reward for sure. Yeah, but that last one there, exactly. Take a look at the U.S. dollar, okay? Make sure that when the pound is hitting supply, that this U.S. dollar index chart, make sure that is down into that demand level, or at least close to it, very close to it. Now you're stacking the odds in your favor. Does everybody get that? Okay? All right, pound dollar into demand, dollar index into, pound dollar into supply, dollar index into demand. Okay. All right. No, Boyke, we don't want to take breakouts. I'm not at all saying take a breakout. No. We want to take a retracement to that level. You don't want to take the breakout. You know what I mean? We're looking to buy a pullback to the origin of that breakout. Make sense? No, I didn't take this. Remember, probably one of the most important part of the strategies is if you see this breakout in the pound here, see this explosion out of here, everybody wants to learn how to be a part of that. Everybody wants to buy that, and it looks like easy money. Okay, I would never ever do that. I haven't taken a breakout entry. I don't even know if I've taken one in my life. I would never do that. Instead, let this rally happen out of this area. Let prices explode out of the area. Maybe they go up, maybe they go down. Who cares? But once you see the strong move away, that's what tells you that demand exceeds supply at the origin of that, right? The only reason why it rallies is because there's too much demand here. So let that happen and then buy the pullback, okay? Yeah, exactly, Boyke. So what I'm saying is, on a retracement back into this level, I would be looking for to take profits at a 2-to-1 gain, okay? Okay, so whatever this distance is here, entry to stop, I'd look to make 2 times that, okay? Okay? All right. That's just, again, a little day trade. The trade I'm more interested in is, the pound getting up into that supply and the dollar moving down into demand. Okay? The Boyke breakout. There you go. All right, we can look at another market, and I have my list here, but if there's one you really want to focus on, I can go there. Aussie. Okay. Yeah, that one's right up into level. Let's take a look. Whoops. Do that. Okay. So I could tell you, okay, this chart right here, just so you know. Now I've been doing stuff with FX Street for a long time, but I could tell you my first session ever with FX Street, we put these lines in this chart. That's how long these supply lines have been in this chart. We've taken a number of trades off this big picture supply level, and it's been a nice ride. Okay, now we're finally trading deeper into this level. Okay, now we're trading. Okay, now we're trading deeper into this level. There were charts, Boyke, but honestly, back then, I didn't even know what charts were. So, towards the end of my time on the trading floor is when I finally kind of discovered charts. But even then, I didn't hear about technical analysis. I didn't hear about any of that stuff till way after. Okay. But why? You don't need charts there. I mean, you have the orders in front of you. You know where the buyers and sellers are, right? Okay. Okay. Okay, so take a look. So we're moving deeper into this supply level, okay, which means that we would look to be short sellers into some levels here. So let's see what we have. Let's see if we have it. Let me go down to even smaller time frame. Okay. Let me set up this chart for you, and then I'll grab it. All right, so I'm gonna let's see. It's tough to map out a perfect area here, but let me do my best. Okay. So we're up right to this prior high, and again, I'd be more comfortable with this opportunity. I would look for more of a rally. Let's go just above the high. Here, I'm going to capture the chart again. Okay. So yeah, on a new high into that area. On a new high into that area, it seems fairly low risk. And if you're not comfortable, think of it this way. Where is the look at that chart, and then look at the monthly chart here of Aussie. Can you think of a worse time to buy into this market over the past few years? See what I'm saying? All right. So on a new high into this level, the only thing that would make a short up here better is if that dollar, that dollar index was into its level. Make sense? Okay. All right. And again, it may fall from here. I mean, we're on a pretty small time frame, and I went very conservative with those lines. Okay, so it may fall from here, but we'll see. Okay, if it goes back up and makes a new high, fantastic. All right. On the buy side, I wouldn't even be looking for a demand level at this point. There are plenty of them, but they're much lower. We wouldn't be interested buyers until this market came way down. Okay. Again, not a whole lot to talk about there. You just plan the trade out and take it like a robot. Okay. That dollar, yeah, for anyone that came in late, we've looked at this chart a couple times already, but I'll pull up one more time. So it would be, there's our demand level below current price in the dollar, our supply level above current price in the dollar, and that's where we'd be looking for prices to change direction. Okay? So again, if the dollar's into demand, we're looking to short majors against the dollar. If the dollar's into supply, we're looking to buy majors against the dollar. Okay? Yeah, for me, this is plenty. Looking at this chart is plenty. Okay. Is there another market someone wanted to look at? We can. Again, I have my list here, but if there's one you wanted to go to next, no problem. All right. If you want the euro and the Swiss, we can certainly look at those. Okay, here's the euro. And now the euro has a really nice area that it's coming into. It's obviously we have a strong rally underway. Let me share this with you. Let me just set up the chart, and then I'll share this with you. And we'll set the trade up, and we'll explain the logic. And while I'm doing that, by the way, it was nice to meet some FX Street people in Manchester, England, about a week ago. I don't know if any of you guys are here, but that was really nice. Good to put a name to a face. We had felt like a little get together in Manchester. Okay, let me grab the chart for you. Boyke, no, I would never use fibs. No. And the reason is because here. Dudley, yes. Still raining, huh? A week and a half later? All right. Okay. Yeah, so Boyke, the reason why I don't use Fibonacci retracement levels is because think about it. When you use Fibonacci levels, you have when prices rally, now you put your fib retracement levels in. You've got a choice of like 5 retracement levels you can buy off of, right? And what's your favorite? I definitely don't use projections, but what's your favorite fib level? What's your favorite? What do you like? What do you like? The 50. There you go. Someone likes the 50. 618. Okay. So first of all, just the fact numbers. Okay. If Fibonacci really worked well, you wouldn't have different people typing in different numbers. Number one. Number two, out of all the retracement choices that you have when you use Fibonacci retracement levels, okay, which one, if you look back on a chart, which one is the one that's always going to work? It's going to be the one that lines up with real support and resistance or real demand and supply. Okay, the other ones Believe me, price is not stopping there because there's a line on the chart, right? Okay, it's because there's real buyers there or real sellers. So you might say, well, then why not incorporate the two together? It's just increasing the odds. But what most people will find is, after a while they'll say, well, I'm only picking the fib levels that line up with real supply and demand levels. So why not, do I really need the fibs? That's all I'm saying. Okay. All right. But hey, if they're working for you, don't stop using them. All right. Don't let me, I don't want to twist your arm. All right. So again, just, let me share this picture with you here. So if and when the euro, now what's nice about the euro here, it's kind of rallying up into that level, but there's a nice real quality odds enhancer that we like, and this is something that I use in my trading all the time. You see how we have two levels on top of each other? For me, that's a really big thing. Levels on top of levels. Okay? Levels on top of levels. And you have that here. But what'll be nice is, if and when the euro reaches those supply levels and the US dollar is into this demand level over here on the left, okay, that is key information. And again, what we're doing is stacking the odds in our favor. Now, the other side of the equation for those that are new to this, again, watch the recordings in your free time when you have nothing else to do, and pop up some of those recordings, and you'll see a lot of them are very lesson based. And once you get the lesson once or twice, I think you'll have a good start in this. But remember, when price gets up to that 136 mark, okay, think of wouldn't you love to have novice traders on the underside of all your trades? Okay, wouldn't you like to have that? Well, right. So think of the actions of the novice trader. Make sure you're always trading with a novice trader. Okay, so at 136, okay, at 136. If we focus on the buyers, when prices get there, and I'm talking, prices aren't there yet, but when they get there, if you focus on the buyers, you'll understand that those buyers are making two big mistakes. They're buying after a rally in price and buying right into a price level where supply exceeds demand. The chart is telling us that, okay? I'm talking about right up in here. Just put something on the chart, and then I'll capture it for you again. Okay, here's that. Okay. All right. So again, levels on top of levels. What that means is, think of it this way. Again, the way I work, I always bring this back to what's real. Think of it this way. If let's say you're on, pick the biggest bank dealer in the world. If you could be on any trade desk around the world and have a glimpse of the real buy and sell orders just for one day so you can make some free money, who would it be? Anybody? It doesn't matter to me. Let's say you're on that trade desk, right? For the morning. All right. Robbie's choosing IB. Let's go with IB. So you're on the IB trade desk, and guess what? It's your lucky day. You could trade your own account that day. So now you see that there is a big stack of sell orders at 136. Okay? Where are you going to be comfortable selling short that day? No matter what the news is, no matter what anything is, you're going to be comfortable selling short at 136, right? Okay? Let me ask you this. Is there anything that would make you more comfortable selling short at 136? Okay? How about this? How about if there was an even bigger stack of sell orders at 137? Would you now be more comfortable selling short at 136? Okay? And if you agree with that, right? Okay? If you agree with that, then the only question left is, what does that picture look like on a chart? It's levels on top of levels. Okay? So that's the type of logic you want to have when you're trading. All right? Levels on top of levels. And again, when prices get up here, ideally, the U.S. dollar index will be down into or close to that demand level. Okay? Let's see. I'm just reading back and trying to get some questions. Yeah, SD, the times when I'll do that is on larger time frames, when those things are really far out on the curve. Because if you take those, on smaller time frames in the middle of the curve, probably not going to work. Okay? And that's a pretty important component to this. All right? And then, of course, a target there, we'll go to a smaller time frame and pick a target for that potential short entry there. So let me do that. Okay, so if you look at this chart right here, and if you look at this just above this 131 area, I'm just going to put a blue line on the chart right here. I'm going to use 2 time frames to identify targets. We want to put our targets at opposing demand levels. Okay? So I would put, let's see. Okay, just a sec. There we go. Okay, so I'm going to show you now a daily chart and the 240. Okay. So those blue lines represent where the profit targets would be. Yeah, Sylvester, because that level did not meet the definition of support for us, or demand for us. Okay, we would not call that a support level. Got to meet our criteria and rules. And by the way, it's great to see that there's quite a few new people in the session. Even though it may be a little confusing for you, I promise after you watch some of those recordings, and they're not that long, you'll start to get this and speak the language and understand how to identify turning points in markets before markets turn with a very high degree of accuracy. So if we're looking to sell short around the 136, 137 area, I would be looking for targets of those 2 blue lines there, this one being right around 131.5, just above this demand level. Okay, and then this one being right around 128, just above this demand level. Remember, when we're taking profits or buying, okay, when we're for profit taking on the buy side, we always want to get out before prices hit the demand level, because if we wait for prices to hit the demand level, there's competition to buy, and we don't want to buy when there's competition to buy for profit taking. If we're buying to get into a trade, then we want to wait for the demand level, right? We want to keep it very low risk. Okay? Okay. All right, let me just read back and make sure I didn't miss too much. Boyke, you're asking a good question. But Boyke, I thought you knew the answer to this question. He's asking, what is the minimum number of sideways candles for a supply-demand level? The answer there is the fewer the candles, the less activity, the better. Now, the books will tell you to look, when you're looking for support and resistance levels, make sure there's lots of trading activity in that area. But the truth is, if you think the logic through, the opposite is true. In other words, at price levels where supply and demand is most out of balance, okay, remember, where are prices going to turn in markets? They're going to turn at price levels where supply and demand is most out of balance. Okay, right. So now, what does that picture look like on a chart? Well, it's not. Think about it. At price levels where supply and demand is most out of balance, are you going to get many transactions or very few transactions? You're going to get very few transactions, right? You have the potential for the most activity there, but the reason why you only get a small amount of activity is because all that potential is on one side of the market, the buy side or sell side. So, given that at price levels where supply and demand is most out of balance, you get very little activity, that means that's going to equate to very few candles on the chart and very low volume, okay, which again is a surprise to most people, but just go back and look at your charts, okay? All right. All right. Okay. All right. Yeah. Thanks for that help, SD, for helping out some new people there. Excellent. Yeah. So Peter, volume is generally low at these levels. Okay. In fact, if you're trading a market where you actually can see the volume, for me, I always require very low volume in the levels. That is levels. Okay. Great question. It's the question that I always hope nobody asks, but I don't want to ignore any questions. So thanks for that, Johnny. But yeah, so he's asking, let's see, do you give enough info to us to trade, or do you save the important info to OTA with 2 question marks? Well, the answer is just real quickly. I don't want to waste your time with this, but just put yourself in my shoes for a minute. I'm kind of in a no-win situation because for those of you that we've been together for a while in here, hopefully you know that I try to give as much information as possible to make sure that that it can help you achieve your financial goals. But on the same notes, and I write the articles at Online Trading Academy. But here's what I go through. When you give out too much information, every piece of information, all the odds enhancers, every piece of the strategy, the people that have invested so much time and money into the program at Online Trading Academy, I get hate mail from those people then. You know what I mean? So so I try to always find that balance where I'm comfortable that, the information that we gave here today is enough to keep people out of trouble and definitely guide people in the right direction and get them, hopefully very close to where they need to be. But the same note, so I think you get it. Thanks for that, Carol. Yeah, the XLT, that is the trading room, the XLT program. So, anyway. So, and you know what? I always go overboard, so I get a lot, but anyway. All right, let's keep going. Okay. All right. Okay, great. Excellent. Let's move on. You know what? I know we're kind of short on time here, so let me do 2 things. Let's jump back to that yen and see where the yen's at. I haven't really been watching it. Got other markets up in the corner of my eye here. I see the equity markets are pretty busy. All right, so we're not getting the rally that we want in the yen. Hopefully prices will, maybe something will happen. We'll get a spike up to that, 84.60 area. Let's see. And let me just pop over to one more market here. Yeah, John, you got that right. Okay. All right, so let's see. Yeah, I saw someone say they just shorted this market. I guess you did just kind of rally into a little level. Moving on to a smaller time frame here. Okay. Yeah, so Euro Swiss just kind of rallied up into a little area there. Again, you have a lot of levels on top of levels. Looks like price barely got there, not quite. So just be careful with that. You don't want to enter positions too early. I like to wait till they come right into the level. Grab it right in the meat. In other words, when you're selling short, make sure you're selling to someone who's buying right into the meat of that demand into that supply, like this euro, for example. Okay. All right. So if you look at the chat window there, okay, that's okay, Alex. Just make sure you're comfortable with it. If you look at the chat window there, I typed in my email address, sseiden@tradingacademy.com. If you have any questions, the weekend's coming up, so I have plenty of email time. Okay. And there's my email address. If you have any questions, certainly shoot me an email. I can give you some more information on this stuff. And again, watch the recordings. They're free. I don't even think you have to sign up for anything. They're on fxstreet.com, and there's even more on onlinetradingacademy.com. So either one, there's plenty of recordings there that will hopefully get you in the right direction. Again, if you have any questions after watching them, shoot me an email. Happy to help. All right. And thanks again to FX Street for putting together this incredible global community of Forex traders and trading education. Excellent. Thanks, everybody, and have a great weekend. Take care.